Hey everybody, Signet here, and today we're going to continue a discussion that seems to just continue to go and go. This conversation is about paper trading. So what we want to do today is review this set of rules. Now, I didn't write these rules. I want to point this out. I came across these rules a long time ago, and if I could remember where I got them from, I absolutely would give attribution, but I don't know where I got them. I just remember having them basically since I started trading, and there's something that I've constantly used in my own evaluations. Now I've added to this in my own way, but let's just first start out with some of the key things. And if you're wondering why we are having a video discussion about paper trading, a lot of times during my streams, I try to use the shorthand when I'm talking, referring to, different markets, different ideas, different trade logic. And I've made comments before that paper trading is worthless. And if you're new to the community and you haven't really heard me talk about paper trading, you may take that to be my entire perspective on paper trading, and it really isn't. It's half of a sentence. If I was to slow down and say the entire sentence, it would be paper trading is worthless if you think that it's the bridge between you and profitability. Alone, paper trading is not enough. You will not become a successful trader from just paper trading, especially if you don't have any experience or you haven't had any training or you haven't tried to study anything about paper trading. Because believe me, I get it. It seems so easy. We can just turn on a pretend account and we can go in and trade. What else do we need to know? But without structure and guidance and rules and doing the follow-up work afterwards, then you're only getting some of the benefits of paper trading. Now, speaking of the benefits, one of the greatest things about paper trading is getting familiar with your broker. If you open up a new account at a new broker and you go and you're trying to use their trader platform, you have to figure out how to adjust the charts and where the drawing tools are at, how to load indicators and how to change time frames. And we haven't even started talking about actually putting on a trade using the dome, and what kind of different stops do they have and what different ways can you get into the market. Not all brokers are developed the same. And, just for an example, if we look at something like Thinkorswim offers a lot of different ways to get into the market and to get out of the market. They've got all of these different entry tools, right? And if you're already in, you can use something like an MOC to get out. This is an order that will make sure that you're out of the market by the end of the day, win, lose, or draw. And you may not like the number that you get filled at, but it's definitely going to get you out by the end of the day. And not all brokers have this, right? And this is some of the benefits of paper trading, of learning what the broker that you have can and cannot do, learning how to save your work, learning how to, develop a plan. And we're not even talking about taking trades yet, right? We're not talking about like, well, I want to trade a trend trade or a 5-minute open range breakout or something like that. We're literally just talking about, oh, I'm going to try to figure out how to use this platform. Maybe how to change the colors of the background or change the colors of the labels or the indicators so that I can see them better. This is one of the greatest benefits of being on paper is that no matter what you do, you're not going to accidentally get into or get out of a trade and screw everything up because it's paper. I recently got a new broker and I went right into the paper side of things and started playing with it, trying to figure out, hey, what makes this broker different? What is familiar about it? What can I do with it? So that's one of the greatest assets of having a paper account, is getting familiar with the broker, knowing that you won't accidentally get into or get out of anything. Another really big benefit of paper is to do trading drills. Now, granted, those drills are almost all day trade related, and not everybody day trades. But if you are day trading, then doing trading drills are absolutely amazing to help you improve a particular thing about your trades, your entries, your exits, adding in, fading out, all kinds of things that trading drills can help you do better. Another thing about paper trades, especially when it comes to the options world, is to deliberately take a losing trade. I mean, think about that. I would never want to deliberately take a losing trade in a live account. And yet on an options trade where I really want to see how the option changes when things go wrong, the options pricing model, I want to be able to look at that in a real trade, even if it's a real paper trade, right? Because I don't want to go take a losing trade just to learn from it. So there's all kinds of benefits to having a paper trade besides just coming in and pulling the trigger and showing that we can make paper money. So if you've heard me use that sentence before, that paper trading is worthless, then I was probably rushed and I didn't complete the whole sentence, which is paper trading is worthless if you think it's going to be a bridge between you and being a consistently profitable trader. It's not enough. You need more, right? So it's one tool. If you're building a house, a hammer is worthless by itself, but you need that tool to accomplish the task, right? So you definitely need to paper trade to improve on all kinds of things. One thing that I've seen that really just, I don't know, it really bothers me, is that new traders will show up and they'll say, well, I'm in paper and I'm going to stay in paper until I hit this benchmark. And they're not doing anything other than that paper trading, right? And if that's all that you're doing, when you go live, you're very likely just going to get run over. So you have to do more than just take the paper trade, right? So let's go back over to the Discord and kind of just go through this list. It's not a very long list. Shouldn't take us an inordinate amount of time. We need to find a way to create feelings of greed and fear in your paper trading account. You have to find a way to put that in there, because in real trading, there's fear and greed. If you're taking paper trades and the paper account is $100,000, and you know that you're going to start your account with $2,000, and you're putting on $30,000 trades that's risking $10,000 a piece, and it's all in paper, and you're getting these really amazing outcomes, that's really unrealistic and unproductive. One thing that you could do is set a benchmark. Earn what you need to fund your live trading account. So what that means is, suppose you know that you're going to start with $5,000. You could, for an example, open up a paper account with, say $5,000 in it, and you could start growing that out, earning the full capital that you need, right? And of course, it's paper earnings, so you're not really going to be able to do anything with it. But if you can earn your way up to that goal, that you can have that benchmark, and every day you're looking to accumulate more and more profit, and that on your losing trades and on your losing days, that you take the kickback, right? That it's pushing you farther away from your goals. That way, you actually have a target to get to, and it helps promote that fear and greed that we were talking about. Set discipline goals. You really do want to have a set of rules. One of the greatest things about paper trading that individual people have told me was really helpful was to help them see their own behavior. Were you actually able to stick with a plan, right? Because a lot of new traders haven't really tested themselves. They don't know what kind of person they're going to be when money actually is on the line. But you can start to get a feel for the kind of person you are. Are you a risk taker or a rule breaker? Do you constantly strive to be better and then come up short, breaking all of your rules and doing everything wrong? Because if you're doing that on paper, you definitely don't want to go live. To be able to set some goals, you could, take X a number of trades, all of the same kind of trade plan, say a 5-minute open range breakout. Suppose you wanted to do 40 of those. And then you would go live only after you've taken 40 of those, right? If you start changing your game plan or you start breaking the plan, then you have to reset the number of trades, right? And that's a really useful way to help keep you on track so that you don't constantly change your strategy. That's one thing that I see a lot of traders do. They're constantly trying to adjust it and tweak it and maybe chase after something else, and so one day it's, oh, I want to be a contrarian trader, I'm gonna catch just the pullback run ups, and then the next day it's, oh no, I'm gonna do pivot point trading. Pick something and stay on it. Another one is to never reset your trading account balance. So what that one entails is, suppose you do get a big loss, you don't get to go in there and reset it back to its previous values. You would have to earn it back again. This one's really important if you set a benchmark before you can go live. Suppose that you needed to hit a $25,000 goal in paper before you could go live, and then you take a big punishing trade that puts you in the negative. If you have to earn your way back out of the hole before you can go live, that would be the way to do it, right? Not to just go in and reset the account. Remember, the goal is to try to keep it as realistic as possible when it comes to the kind of trading that you're doing. So one of the things you want to do is adjust your simulated market capital. A lot of the brokers give you like 50,000 or 100,000 starting out. That may not be a realistic goal. Maybe when you go live, you're only going to have $500 or $5,000. Reset that paper account to a value that more accurately reflects what you're really going to be trading with. Try to account for slippage. Now, some brokers will actually fill you with the bid and the ask in the current conditions, but others won't. They'll just let you in automatically. So this one's a little tricky. It starts to get a little deeper into things, but if you can, really try to account for that slippage. These rules, remember, I didn't write these. They're kind of old. They've been around for a while. And I really think that this one, when it comes to the slippage, is pretty much a non-issue nowadays. You're using something like Trade of 8 or Thinkorswim or something like that. They're already accounting for slippage, but still they will fill you almost instantly, especially for options trades. And that's just such an unrealistic expectation. I've seen a lot of people say, well, when I was in paper, these kind of trades fill really fast. How come I can't get filled now? They had grown this expectation that complex trades like iron condors or butterflies would just immediately get filled when price got to that level, when in the real world, multi-leg spreads, they're a lot harder to fill. Try to put your commissions into it. Again, this is something that a lot of brokers are already dealing with for you. But if it doesn't, make sure that you subtract your brokerage commissions. Use real data. Now, I see a lot of people using the go back on Thinkorswim. They will pick a day and go into the past and trade it. Sure, it's helpful. And, we're not talking about downloading market data and going back and intraday trading a particular way. We're not talking about that. We're more talking about the idea of delayed data, like 15 minutes delayed. You're not live in the market. For the go back stuff, there's a particular reason to do that as well, right? If your goal is to, for an example, be a day trader, you really don't need to go into the past and on the go back. You could just go to the paper account and trade the futures. I've had people say, well, I want to practice at night and the market's closed. Well, yeah, but not the futures market. And any day trade that you would normally want to do, price action wise, you can do it in the futures, right? If you want to trade breakouts and ranges and trendline breakovers and flags, and you're going to do that in Apple or Microsoft or something like that, you could just as easily do it and learn how to do it trading the futures at nighttime. Price wise, how much money you could make or lose, it won't be accurate or realistic, but learning how to read those candles, that would be a big benefit, right? So no delayed data if you can help it. I know that some people, they don't have access to anything better than that. And, if that's all you have, you pretty much have to use what you got. But for the most part, if you can, use the real data, none of that 15-minute delayed stuff. Remember, one of the greatest benefits of being on a paper account is experience, windshield time, putting trades on, taking them off, interacting with the market. That's some of the greatest benefits that you can get out of this entire experience. So get as much of that as you can. It's not about how much money you made. It really isn't. And then try to future-proof your trading platform. Think about your eventual live trading, right? Try to look into the future and set your platform up in a way that helps you get to that future goal. Stay away from trading competitions. Now, this one, I've actually seen this one come into play. A while back, we were all doing like a $250 account challenge, right? Like the small account challenges. Don't participate in things like that. It's not going to help you. It's not beneficial. Now, again, these things are not going to make you a successful trader by themselves. You want to analyze the trades that you took. You want to go back and look them over. Did you get out too soon? Did you stay in too long? Could you have done something different? Did the market give you any signals? What were those signals? We have to learn to see them, right? And some of the best ways to learn how to see the signals is to go back and look and see if there even was any signals. Learn them, identify them, and then try to teach yourself how to see them in real time so that when you're taking these trades, the signals are showing up and you're learning to recognize what those signals are. So that's it, everybody. Short and sweet. We're going to keep this video as reasonably decent time. I am going to come out with more videos. We'll do a paper trading video on the futures, one on the options, maybe one on stock, but definitely futures and options needs to have their own paper trading video. I appreciate your time, and I look forward to seeing you at the next one.